Good morning. Am I audible and visible? Hello, hello. Good morning, good morning. Good morning. So we'll just wait for 2 minutes, let everyone join, and then we'll start. Good morning. Hello, good morning. So tell me, did you revise whatever we did yesterday? Did you revise whatever we did yesterday? Yes, yes, Sanjana. Special damages are given over and above the ordinary damages. Okay. Special damages are given over and above the ordinary damages. So you will definitely get the special as well as ordinary damages. Most welcome. So, Unacademy has launched the CA Iconic program, which is a flagship program for the CA Foundation Aspirants. So, what do you get in this live mentoring program? You have one-to-one personal coaching, one-to-one doubt solving. You have evaluated test series, printed books, industry expert sessions. Along with that, you also have live classes, weekly tests, study materials, and a structured course, and unlimited access to all the classes. What do you get this in this one-to-one live mentoring classes? You have mentors and experienced coaches. They will help you, with your doubt solving. You can discuss your doubt, clarify your concepts, and with just a click. You also get customized plans. Yes, customized study plans are also provided for you all, so that no person is the same. So what works for me may not work for you. So as per your needs, you will be given a customized study plan, and also a guidance as to your articleship, as to how you can get into articleship, where it would be better to go for articleship. All that guidance would be given to you. You also have evaluated test series, where the test series would be conducted in three parts. The first test series would be for the 40% of the syllabus. The second test series would be for 80% of the syllabus, and the final will be for 100% of the syllabus. Along with that, we also have analysis classes for the test series, that is an analysis of the question paper, and also an analysis of your answers, that is what needs to be changed or what was good in your paper. So this iconic subscription for the foundation course, we have three options here for you. You have a 6 months, a 12 months, and a 24 months course, where 6 months would cost you 25,000. that is 4167 per month. 12 months would be for 35,000, that is 2917 per month. And the 24 months is 58,000, that is 2417 per month. Use the code Yashas Live. Use the code Yashas Live, YESHASLIVE. Yashas Live, YESHASLIVE. Yashas Live. Use the code Yashas Live to get to unlock the subscription. We also have a combo subscription for the iconic batches for the foundation as well as intermediate. Obviously, you're not going to stop at the foundation level. You need to go to the next level also. So we have a combo for the foundation and the intermediate level. And this combo is for 12 and 20. To be very honest, the 12 months makes no sense if you are taking a combo, because more than 6 months is just for your foundation, and then more obviously almost 8 months is for your inter. So 12 months for your for the 12-month subscription, it's 49,500, that is 4125 per month, and for the 24 months is 66,000, that is 2750 per month. Use the code Yashas Live, YESHASLIVE, Yashas Live, to get the subscription. We also have a CA Foundation Combat where learn, compete and conquer. So we have a scholarship from a pool of 1 crore rupees. We have a scholarship and up to 10% scholarship to top 10 rankers. To the top 100 rankers. You can get a 10% scholarship on your fees. It will be on the 14th of November at 12 p.m. Use the code Yashas Live, that is this Sunday. Use the code Yashas Live, YESHASLIVE, Yashas Live, to avail of this combat. So I guess it's a live test, Android app and web browser. You can do it anywhere. So good morning all of you. Good morning. So Padma and good, enjoy Dashwant here. It's quite hot actually. Padma, subsequent illegality means after the contract is made, it becomes illegal by subsequent change in law. You remember supervening impossibility, change in law. So after the contract is made, there is a subsequent change in the existing laws. And because of this subsequent change in the existing laws, the contract can no longer be performed. This is what we mean by subsequent illegality. This is what we mean by subsequent illegality, right? And the contract is discharged by supervening impossibility. Remember supervening impossibility? Remember supervening impossibility? Padma? You got it, or should I explain again? Should I explain again, or did you understand that? So basically, what is subsequent illegality? When after the contract is made, it becomes impossible to perform. When after the contract is made, it becomes impossible to perform. Why? Due to subsequent change in law. So very simple example, I tell you I will sell these goods to you, but before I could actually sell the goods to you, there is a new law which says that selling these goods is not allowed. So this is what? This is change in law, supervening impossibility, the contract is discharged. Can you claim damages from me? Just a question for everyone. Can you claim damages from me? Can you claim damages from me? What? Can you claim damages from me? Yeah. You need to write about supervening impossibility. Correct. Can you claim damages from me? No. Because supervening impossibility is not something which is in our control, something beyond our control. I cannot claim anything at all. So we'll start with partnership. Now we'll be doing a little fast because this is an easy chapter. Topics like rights and duties I'll not cover up. Topics like rights and duties I'll not cover up. We'll cover up the more important parts of the chapter, and so that at least we can cover up all the 3 remaining chapters. Okay, most welcome, Padma. So wow, seriously. Indian Partnership Act 1932 came in force on the 1st of October 1932 and applies obviously to the whole of India, right? Applies to the whole of India. Now, what is partnership? Partnership is an agreement between 2 or more persons to share the profits of the business carried by all or any one or more acting for all. So, from this itself, I get the essentials of partnership. So from this definition itself, which is given under section 4, we get the essentials of partnership. So what are the essentials of partnership? First of all, partnership can never arise out of status. There should be an agreement. So just by mere status that two persons are carrying business does not suggest that there is a partnership. There should be an agreement. When we say agreement, agreement can be oral, express, implied. It can be, when it is expressed, it can be oral or written. Yes, even it can be implied. And if it is written, the deed where we mention the clauses of partnership is known as the partnership deed. Since it's an agreement, obviously I cannot agree with my own self, right? There is no soul connection here going on. So I need at least two persons. So the minimum number of partners is what? Minimum is 2, but maximum, now the maximum is not given under the Partnership Act, it's given under the Companies Act. And section 464 of the Companies Act says 100, but the rule says 50. So the maximum should not exceed 50. And if it is more than 50, if the number of partners is more than 50, then the partnership will become an what? Illegal association. If it is more than 50, the partnership will become an illegal association, right? Now, then the next one is, what is this agreement about? The agreement is to share the profits. We never say losses. Two reasons. One is the law reason and the other is more of a psychological reason. The reason as per psychology is obviously why should we talk about losses. Not going into the detail of that. I've already told you about it in the class. But when we say why we only talk about profits and not losses, I can have partners who do not share the losses. We can have partners who will not be, contributing to the losses. They will only be sharing the profits. So when I say in the definition sharing of profits, I'm making it mandatory for every partner to share the, when I say sharing of losses in the definition, I am making it mandatory for every partner to share the loss. But I can have partners who do not share the losses. So that is why we say sharing of profits, because sharing of profits does not necessarily mean the sharing of losses. But obviously, if you are sharing the profits, I cannot call an outsider to share the loss. The loss also has to be borne by you only. But I can still have partners who will not bear the losses. In what ratio do I share the profits? Agreed, and if nothing is agreed, it is shared equally. In what ratio do I share the losses? If whatever is agreed in that ratio, and if nothing is agreed, then losses are shared as per the profit sharing ratio. Right? Where will I get the profit from? From the business. What do I mean by business? What do I mean by business? Business means any trade, profession or occupation, but it has to be recurring in nature, right? It has to be recurring in nature. So unless it is recurring in nature, it is not what? It is not considered as business. And who will carry on the business? Business can be carried on by all the partners, any one or more of the partners. And when any one or more of the partners is carrying on the business, he is not carrying it in his own name, he is carrying it on behalf of or acting for the others. So when he is carrying the business, he alone is not liable for it, but the whole firm is liable for it. And on that grounds, we call this as mutual agency, that is business carried by all or any one or more acting for all, right? Acting for all. And this mutual agency, this is the cardinal principle of partnership, because this is not found in any other form of business. And the same concept applies in principal agent. In principal agent, what happens is the agent does the work and the principal is liable. Similarly, here also the partner does the work and the firm is liable. So, we can call partnership as an extension of the law of agency. That is, the same laws as apply to the law of agency about the liability being of that of the principal, the same laws applies here. So when a partner does the act, it is not he alone who is liable, but the whole firm is liable. So partnership is an extension of the law of agency. Now, moving on to the next one, how do I test my partnership? Like, how am I supposed to know whether there is a partnership or not? Ma'am, what you ask, ma'am? Agreement, no ma'am, I will see. Agreed. But agreement, if written, I will see. If not written, how will I see? Some microscope or some, that telepathy God has given me. I will look into your eyes and see. That only happens in songs, okay? That only happens in songs, nowhere else. So, I repeat again. So, when we talk about test of partnership, if the agreement is written, I know there is a partnership. But if the agreement is not written, that is, if the agreement is what? implied or oral, how will we know there is a partnership or not? Can I say the the coexistence of all the essentials will make it a partnership? If there is an agreement, if there is business, if there is sharing of profits, if there is mutual agency, if all of them are present, then I can say that it is partnership. But the most important test of partnership is mutual agency. In fact, mutual agency is one concept which does not exist in any other form of business. So, if mutual agency is present, it is a conclusive evidence that there is a partnership. If the other essentials are present, it can also happen in other forms of businesses. But mutual agency is one concept which is only and only in the case of partnership. And if mutual agency is present, then I can conclusively say, yes, there is a partnership. So, sharing of profits is the prima facie evidence. What is prima facie? What is prima facie? What is prima facie? Full giggle, huh? Answer me, what is prima facie? Can we say pehli nazar? Yeah, please not that song. Everything when it connects to a song, you'll be lost there rather than understanding what I'm saying. Yeah, first look. Wow. Sharat, like seriously, I'm asking you the meaning of prima facie and you are telling me sharing of profit? Huh? I'm asking you the meaning of prima facie. Prima facie means what? First look. When I look at the relation of two or more persons for the first time and I see that these persons are sharing profits, the first look or the first evidence I can say, okay, partnership could exist. But this is just the first evidence, not the conclusive. But if I further see mutual agency, if mutual agency is also present, then I can conclude that yes, there is a partnership. So sharing of profits is the prima facie evidence of partnership, but the true test is mutual agency. Now, what are the different types of partners we have? Now, before types of partners, let me just tell you about the types of partnerships. We have four types of partnership: partnership for a fixed period, particular partnership, partnership at will, and general partnership. What is partnership for a fixed period? The name is only telling us, which is formed for a specified period of time. Once the period is over, what will happen? The firm will be dissolved. Once the period is over, what will happen? The firm will be dissolved. But if the partners want, can they continue? Yes. And if they continue, it becomes a partnership at will. What is particular partnership? Which is formed for a specific purpose, a specified purpose, right? What is particular partnership? Which is formed for a specified purpose. Once the purpose is over, what happens? The firm, I am repeating it again, I am not just talking about partnership, the firm will be dissolved. But can we continue? Yes. And if we continue, it becomes a partnership at will. What is partnership at will? Will, my choice, my desire, meri marzi. There is no time given to determine the partnership. So the partnership will continue as long as the partners want. We will continue the partnership as long as we want. One of the most unique feature of a partnership at will is that any partner can give a written notice and retire from the firm or dissolve the firm. Like otherwise, to retire or dissolve, I need the consent of the others. But here, in case of a partnership at will, even without the consent of the others, I can just give a written notice and I can retire from the firm or dissolve the firm. I hope it's clear to everyone. Yes. Now when we talk about general partnership, it is not for any specific purpose, but for general business. It is for general business. Now, when we say partnership for a fixed period and particular partnership, when they convert into partnership at will, the rights and liabilities of the parties, unless agreed differently, will remain the same. But the rules of partnership at will apply. Now, what are the different types? This is an easy chapter, so going a little fast. You have doubt, you ask me. Now, what are the different types of partners? Active, he brings in capital, takes part in the business, shares the profits, bracket me the losses, is known to the outsider, is liable to the outsider, has to give a notice. Notice, I am talking about public, not to the other partners. To the other partners, so anyway, every partner has to give, right? What is a sleeping? The other name for active partner, he is also known as what? Ostensible partner. Now, what is sleeping partner? He does not. Does he bring in capital? Yes. Capital generally almost every partner will get. Otherwise, why should I take you? Like, you will not do business also. You will not bring capital also. Chumma, I am like waste. No, ayo, charity. Let us do some charity in my business. Wow. And partnership is never for charity. The motive is always to earn profit, right? So, do I bring in capital? Will this person bring capital? Yes, he will bring capital. Does he take part in the business of the firm? No, I am a lazy person. I am just going to be a little lazy, a little rest. I'm not restless like the active partner, right? So, no taking part in the business. Will I share the profits? Dude, if you don't give me profit, am I just a waste person? I will give you my capital. So, share profits? Yes. Then, in case of in case of a sleeping partner, is he known to the outsiders? No, because he is never coming in front. He is just the behind the active partner, so people don't know. So he's not known to the outsiders. But when it comes to liability, every partner is liable. So is he liable? Yes. Does he have to give public notice? Dude, I don't even know you are there. You come, you go. How? What difference it makes to me? No notice is needed. Then nominal partner, does he bring in capital? Basically, what do I mean by a nominal partner? Who lends his name? And I told you, some person had said, yes, Monica, general partnership is not formed for any specific purpose. It's for general business. Just general business will carry a trading firm, right? So nominal partner, though there is a saying, what is in the name, we realized here that everything is in the name. So nominal partner basically lends his name to the firm. And why will I take his name? Because of the goodwill attached to the what? To the name of that person. Does he bring in capital? No, I've bought my goodwill. He will take part in the business. Oh, please. I am much way above all these things. Does he share profits and losses? Actually, he generally gets a fixed royalty, right? Is he known to the outsider? Yes. Remember, Rajinikanth, everything impossible is possible here, right? So, is he liable? Yes. Does he have to give notice? Yes. Yes. Now, partners in profits only. What is partners in profits only? They share only the profits, not the losses. Name is only telling. But are they liable to the outsiders for the acts of the firm? Absolutely. Liability is for every partner. Every partner will be liable for the acts of the firm. Sub-partner. When a partner agrees to share a part of his profit with another, he is not sharing the firm's profit. He is sharing a part of his profit. So basically, will this person have any rights or liabilities against the firm? No. This person will not have any rights or liabilities against the firm. His rights or liabilities are restricted to that partner's share. So to be very honest, he is actually not the partner of the firm. He is just the partner of the partner. So he is a partner's partner. Partner by estoppel or holding out. When a partner represents another person as a partner, even though he is not a partner represents another person as a partner, and such person does not deny it, right? The second case, when an outsider represents himself as a partner to a third party. So the basic difference is, in one case, the partner is introducing someone, whereas in the second case, a person is introducing himself as a partner. In both the cases, it is partners by estoppel or holding out. And if the third party contracts with the firm, this person who represented himself or who was being represented shall also be liable. He shall be what? Personally liable, as in his liability shall be what? His liability shall be severe. Correct? Yes, yes, yes. That means, Santosh, tomorrow if there is a loss, I will not contribute to the other partners to the loss. But if the third party sues the firm, I am equally responsible for that. If the third party sues the firm, even if I am a partner in profit only, I am still responsible for that suit. I hope you've understood, Santosh. Minor as a partner. A minor actually cannot become a partner of the firm. He can only be admitted to the benefits of the firm, right? He can only be admitted to the benefits of the firm. He cannot be a partner of the firm. When a minor becomes a beneficiary, what are his rights? He has three rights. There was this MTV show, na Bakra. Some show was there, no, on MTV, if I'm not wrong. So, what are the rights of the minor when he becomes a beneficiary? He will get his share of profits. He can check, inspect, and copy the accounts of the firm, and he can also sue the other partners for his share. But if he sues the other partner for his share, he has to sever, that is, cut off all his connections with the firm. Now, what is the liability of the minor? Obviously, a minor can never be personally liable. So, what will be the liability of the minor? It will only be up to his share in partnership. His liability cannot be personal. That is, he is not personally liable. If there is a loss, he will not get his share, and that's it. That is his liability. So, the liability is against his share in partnership. However, he has one more liability. On attaining majority, can he continue to be a beneficiary? No. On attaining majority, he cannot continue to be a beneficiary. So, within 6 months from the day he attains majority or the day he comes to know he was a beneficiary, whichever is later, he has to give a notice. When I say notice, notice means a public notice. Public notice means one in English language newspaper, that is the official gazette, one in a vernacular language newspaper, and one notice to the registrar if the firm is registered. Right? He has to give a public notice and also a notice to his other partners. What notice? That he wants to become a partner or not. That he wants to become a partner or not. So within 6 months from the day he attains majority or the day he comes to know he is a beneficiary, whichever is later, he must give a notice to the registrar of whether he wants to become a partner or not. And what happens? And what happens if he fails to give the notice? He will automatically become the partner of the firm. Right? If he fails to give notice, he will automatically become the partner of the firm. Now, if he becomes the partner of the firm, what will be his rights and liabilities? His rights will be the same only, but he will be liable from the day he was admitted to the benefits of the firm. So, from the day the firm made him the beneficiary, he will be liable from that day. Is it clear? Yes. Nominal partner will have the same liability as any other partner. When we say liability of a nominal partner, liability will be the same as any other partner. So whatever liability any other partner will have, he will also have the same liability. I hope, Mohammed, it's clear. Yes. With this, we have completed Unit 1. If you have any doubt in anything, you ask. Otherwise, we'll move forward. So when I say minor becomes a partner when he attains majority, his liability will be not from the day he becomes the partner, but from the day he was the beneficiary. That is those childhood days when he took the profits of the firm. If third party sues the firm for any of those liabilities, he will also be liable. Which part of the liability you want me to explain, Paul? Before he becomes a partner, that is, as a beneficiary, his liability is against his share. As a beneficiary, his liability is against his share. So when we say against his share, that means tomorrow if there is a loss, he will not get his share. Rather, his share will be used to pay off his liability. That's it. Right? Rather, his share will be used to pay off his liability. This is when he is a beneficiary. Now, if he becomes a partner, he can become a partner either by default by not giving a notice, or he can become a partner by giving a notice. He will obviously have unlimited liability. But from when? From the day he was admitted to the benefits of the firm. So let us say M was a beneficiary of the firm and on attaining majority he has become a partner. When he was a beneficiary, T supplied goods to the firm. Now the firm did not pay, so T wants to sue the firm. So can T hold, Pavan? You will answer. Can T hold M also liable? I am repeating it again. M was a beneficiary of the firm and now on attaining majority he becomes a partner. When he was a beneficiary, T had supplied some goods. When he was a beneficiary, T has supplied some goods, but T had not received the money. So T wants to sue the firm. So when he sues the firm, can T also, hold M liable for that? Can T also hold M liable for that? Pavan, you will be answering. Pavan, you will be answering. So did you understand, Pavan? Did you understand? Partners by estoppel or holding out. So let's just look at both the cases. A, B, C are partners of a firm, and A along with his general manager goes to T and says, I am a partner and he is my partner. He is not a partner, so he should have said, Ruk jao, I am not a partner. Why are you lying? But did he do that? No. What he did? Matlab sitting there, whatever he could do, he did everything. But he did not say, I am not a partner. But he did not say, I am not a partner, right? He did not say, I am not a partner. So tell me, can I say, as far as T is concerned, Dashwant, as far as T is concerned, can we say the general manager is also a partner? Yes or no? He actually did what you guys do, sat on his phone and kept chatting, God knows with whom. So tell me, Dashwant, can we say as far as T is concerned, GM is also the partner of the firm? Yes. And if T contracts with the firm, can we say GM is also liable? And his liability shall be severe, right? Right, also liable. So his liability shall be severe. Now, please understand, when we say severe liability, that means I can hold him liable for the whole amount, right? I can hold him liable for the whole amount. Now, ABC are partners of a firm, O is an outsider. Now, O goes to T and says to T, I am a partner of the firm. Was he a partner? No, but he represents himself as a partner. Now, if T contracts with the firm, can we say O is also liable? Yes or no? And his liability shall be severe. That means if the firm does not pay anything, T can recover the whole money from O. So, Dashwant, I hope you've understood both the cases. Yes, Vibhu, he will be liable up to the date of public notice if he is required to give a public notice. Now, when we say partnership for a fixed period and particular partnership, when it converts into a partnership at will. So, let us say, I had given the same example in the class. I am repeating the same example so that you can relate to that and recall it. X, Y and Z were partners of a firm and they shared the profits and losses in the ratio of 4:2:1. X, Y and Z were partners of the firm and they shared profits and losses in the ratio of 4:2:1. The firm was formed for a period of 1 year. The firm was formed for a period of 1 year. Now what happened was that the one of the clauses of this agreement was that if any partner wants to retire, he must give us 6 days notice. Right? If any partner wants to retire, he must give us 6 days notice. So I repeat again, XYZ were partners of a firm and they shared the profits and losses in the ratio of 4:2:1. And the firm was formed for a period of 1 year. One of the clauses of this agreement was that any partner who wants to retire from the firm must give a 6 days notice. Now, after 1 year, they continue. So, can I say when they continue after 1 year, it now becomes a partnership at will? Can I say when they continue after 1 year, it now becomes a partnership at will? Yes. So, now what Z says is, Z claims that since we have converted into a partnership at will now, our profit sharing ratio should be 1:1:1. Right? Z claims that since we have converted now into a partnership at will, our profit sharing ratio now must be 1:1:1. Then Y gives a written notice to retire. Y gives a written notice to retire. So when he gives a written notice to retire, X says not valid. Why? Because no 6 days notice. Y gives a written notice to retire. So when Y gives a written notice to retire, this X claims your notice is not valid because you did not give a 6 days notice. So tell me, first of all, Monica, I think this was your doubt, Monica. So will they share the PSR in 1:1:1 or will they share it still in the ratio of 4:2:1? What will be the ratio? Exactly. So now it will not be 1:1:1. It will still continue. The rights will be the same. Now tell me, Y's retirement is valid or X's claim is valid? Now tell me, Y's retirement is valid or X's claim is valid? Now, the 6 days notice was a clause which was there in the partnership for a fixed period. And a partnership at will says you can give a written notice and retire. The moment they continue after the 1 year, right? The moment they continue after the 1 year, this clause of 6 days notice is now redundant. It is no longer valid because that 6 days notice was for the 1 year partnership. When they continue after 1 year, it has now become a partnership at will and the rules of partnership at will apply. Rule of partnership at will says you can give a written notice and retire from the firm. Here, Y had given a written notice to retire. Is the retirement valid or not valid? The retirement is valid. So, whose claim is X claim valid? Not valid. Why? Because the retirement is valid. Because the moment we convert into a partnership at will, you can just give a written notice and retire. The rules of partnership at will apply. So, Monica, I hope it's clear. Chalo, now, so can a partner, rights of the partners, I'll discuss it till here because from 9 anyway, we have to do it towards the end of the chapter also. So every partner has a right to take part in the business of the firm unless the agreement says otherwise. So if the agreement says few will be, no, notice means notice to the other partners, not public notice here. So a few will be liable, a few will be carrying on, then it's a different case. Otherwise, every partner has a right to take part in the business of the firm. Every partner has a right to be consulted. Every partner, before any decision is taken, every partner should be questioned. He should be asked about his opinion before a decision is taken. If it is a managerial decision, I need the consent of all. That is, unanimous consent is needed. Whereas if it is a day-to-day matter, then in that case, majority is sufficient. Then, right, every partner has a right to check, inspect, and copy the accounts of the firm. However, it should be done bona fide without an intention to deceive. Then, every partner will have a right to remuneration. You never pay yourself for doing your work. Partnership is your work. You cannot ask for money. However, if it is given in the agreement or if it is the custom of the firm, then I have a right to remuneration. Then right to share profit. Every partner has a right to share profit. Every partner has a right to share profit. If some agreed ratio is there, in the agreed ratio, if nothing is agreed, then equally. However, every partner may not have a right to share exclusive profits, because if every partner will share profits, then who will bear the losses? Then right to interest on capital, no. You are taking a risk, and the return on the risk is your profit. How can you safeguard your risk by claiming interest also? So interest on capital is not payable. However, interest on capital is payable if there is an agreement, or if it is the custom or a statutory provision. This interest on capital is paid only out of the profits, and it is paid up to the day the firm is working. So if my firm closes down and then I pay after a certain period of time, I don't have to pay interest for that period. Interest on advance, it's a loan, so it has to be paid. Agreement does not say it has to be paid, because it's a loan and you cannot get a loan without interest. It will be paid at the rate, even if there is a loss, it will be paid at the agreed rate. If there is nothing agreed, at the rate of 6%. Can you say, ayo, I am suffering loss, don't take interest? He will say, okay, okay, tatastu. He will only do loan amount, give me my loan amount, tatastu. So, can you do that? Yes, Dishita, they can ask. Generally, they don't ask you, but since the topic is there, if they ask you for 5, 6 marks, 5, 6, 7 points are more than enough. But don't write one line point. Please explain the point. Okay. So, interest on advance has to be paid, and it is paid up to the day advance is not paid off. And if a partner pays on behalf of the firm, if a partner pays on behalf of the firm, he has a right to get back the money that he has paid. So, right to be indemnified. And every partner should carry the business to the common advantage. They should be just and faithful. They should not make secret profits, and if they do, they should give it to the other partners. They should not disclose any information of the firm to the outsiders. If any partner demands a copy of the accounts, or the legal heirs demand a copy of the accounts, they should give a copy of the accounts to them. They should not claim remuneration for the work that they are doing. They should be diligent in doing their work. If due to their fraud or neglect the firm suffers any loss, they should compensate the firm. Actually, I thought I will not do these duties, but rights, but still I have done it. So in a just once. Which fourth one? Yeah. You can say it is agency. Same thing. A partner may not be paid consideration for agency. Same thing. Yes, Monica. Now, personal profits earned by a partner. If any partner earns any personal profits from any transaction of the firm, or by using the name or assets of the firm. If it was your personal profit, no problem, but you are earning profit from the firm or from the name or assets of the firm, you will have to give a part of the profit to the other partner. Now, can the agreement specify that a particular partner will not carry any personal business? Can he carry a competing business with that of the firm? No. And if he carries a personal business which is competing with the firm, then also he must give a share of the profits to the other partners. Now, can the agreement says that one partner will not carry any personal business? Yes. Maybe he's an active partner. We are paying him remuneration. If he carries personal business, maybe our interest will be overlooked. So can we stop a partner from carrying a personal business? Yes. So if the agreement specifies that a partner cannot carry any personal business, and I told you human nature, tell them not to do first, they will do that only. So if he then also carries a personal business which is not competing, since it is not competing, he is not liable to give the profits. But since he breaches the contract, he is liable to give damages to the other partners. And can I say if it was competing, he will have to give both profit and damages? Yes or no? Right? Now, implied authority of a partner. Implied authority means the authority of a partner to act in the name of the firm and to bind the firm by his acts. Implied authority means the authority of a partner to act in the name of the firm and to bind the firm by his acts. However, the act can bind the firm only when it is done in the usual course. If it is not done in the usual course, the firm is not liable. So when the firm deals in sugar and we place an order of rice, the firm is not liable because the act is not done in the usual course. So in case of implied authority, it binds only when done in usual course. It binds only when done in usual course. Now, if it is not done in the usual course, but the other partners ratify it, tell me what will happen. It will become valid, right? Then the other partners will be liable. And then if the usual act is done in an unusual manner, then it is the duty of the third party to confirm, only then he can hold the firm liable. So implied authority basically says if a partner in the ordinary course of the business does something in the name of the firm is liable. But the firm is liable only when it is done in the ordinary course. If it is not in the ordinary course, the firm is not liable. However, if it is not in the ordinary course but the other partners ratify it, then the whole firm shall be liable. However, there are certain acts which a partner is not allowed to do. And if he does that, the firm will not be liable. However, there are certain acts which a partner is not allowed to do. And if he does, the firm will not be liable. But even these acts can be done by a partner if he has express authority. So basically, if the firm gives a partner the authority to do any of these acts, then he can do these acts also. But otherwise, if he does, it's not the firm cannot do. A partner alone in the name of the firm cannot do these acts. What? He cannot open a bank account in his own name. Dude, it is the firm's account. How can you open it in your name? It should be in the name of the firm, or it should be in the joint name of all the partners, right? He cannot sell or purchase immovable property. Immovable. He can purchase and sell movable. He cannot purchase or sell immovable. So, he cannot purchase or sell immovable property, right? Then, he cannot enter into a partnership on behalf of the firm. So, let us say two firms want to make a single partnership firm. It is a decision which is a managerial decision. So, the consent of all is needed. So, he alone cannot agree to make a partnership. Then he cannot withdraw any case filed on behalf of the firm. So if a case is filed on behalf of the firm, it is the decision of all the partners to take back the case. A single partner alone cannot decide to take back the case. If a case is going on in the court against the firm, he cannot admit any liability on behalf of the firm. He cannot, ayo, sir, I'm telling you, my firm, no. Sir, you declare whatever. No, you cannot do. You cannot go against the firm. You cannot say anything against the firm. He cannot hire an arbitrator. He can hire a lawyer. If there is a dispute, he can hire a lawyer. But he cannot hire an arbitrator. Who is an arbitrator? Who settles outside the court. He can hire yes, Dishita, this point you should remember. He can hire a lawyer, but he cannot hire an arbitrator. And finally, he cannot compromise or relinquish. Relinquish means someone owes money. Can he say, okay, you don't have to pay. I told you, you are my brother-in-law. What will you pay? You go enjoy money. I will adjust money. Can you do that? No. Giving a normal cash or trade discount is different. But can you completely relinquish the liability of another person? No. You cannot relinquish the liability of another person. You cannot even compromise. What is compromise? I have to pay you 5 lakh. We both agree I will only pay you 2 lakh in full settlement. I can give a normal cash or trade discount, but I cannot compromise or relinquish the liability of another person. Is it clear to everyone? Right? Now, extension or restriction of implied authority. I just said here only acts can be done by a partner if he has express authority. So the the authority of a partner can be extended or restricted by an agreement. Why have you all gone so silent all of a sudden? Actually, you know what? When it comes to partnership, we take it quite easy. Ayo, partnership chiller topic. But these topics are a little, not chiller at least. Understanding everything. Then why the silence? Is it like before the storm will come, that is the silence before the storm? Is it like that? Ma'am, don't worry, ma'am, it is the silence before the storm. And then you will see the storm, huh? Arthaita. Arthamainda, Manasilayo. Did you understand? Yes, sir. Pakka. Okay. No, suddenly you people went like. Now, the authority of a partner. I can give a partner a little more or a little less authority than the others. Right? I can give a partner a little more or a little less authority than the others. But when I give him a little more or a little less authority, this is something which is within the partnership firm. It is something which is within the partners. How will the third party be affected by it? Now, if the third party knows, if the third party, oh wow, I am asking in Kannada, I am asking in Telugu, and you are replying in Assamese. Awesome, man. So, I repeat again, the authority of a partner can be extended, that is, be given a little more authority or be given a little less authority by an agreement. But this is something which is internal between the partners. So, how does it affect a third party? Well, when it comes to a third party, if the third party knows about these extensions or restrictions, since he knows, can he claim ignorance? No, he is bound by them. But if a third party does not know about it, he is not bound by them. He will not be held responsible for these extensions or restrictions. So, an outsider dealing with the firm shall be bound by such restrictions if he has knowledge about it. Correct? Is it clear to everyone? Then there is a topic called notice to the partner. So if an active partner dealing in the course of the business has knowledge about any fact, it is deemed that the whole firm has knowledge about it. But only if it is a real notice. If the notice was with an intention to deceive others, then it is not a real notice and the firm will not be held responsible for what he does. Right? Now, I will just give you a minute. Take a deep breath. Just go through it. If not, everything is fine. We will then go to dissolution of partnership, right? Express authority means authority given by words, by an agreement between the partners. Okay, can we move now? So dissolution of partnership. Dissolution of partnership takes place in 6 different ways: admission, retirement, death, insolvency, expulsion, and transfer of shares. One of institutes, one favorite topic is one of the favorite topics of the institute is what you say, this minor, and the other favorite topic of the institute is this dissolution. Minor, every alternate term you will get a question, and dissolution, one question you will get from any of this topic. What is admission? New partner joins the firm. Admission can take place either with the consent of all or express agreement, right? Admission can take place either with the consent of all or express agreement. Now, when we say admission, the new partner, what is your doubt, Santosh? Okay, now I'll come to it at the end. The new partner, when he joins the firm, he is liable from the day he becomes the partner. So when a minor becomes a partner, he is liable from the day he becomes the beneficiary, but this person is liable from the day he becomes the partner, right? Retirement, a partner can retire either with the consent of all or express agreement, or in case of partnership at will by giving a notice. What is the liability of a partner when he retires? He is liable up to the date of notice. In case a partner is required to give a public notice, up to the date of public notice. In case he is not required to give public notice, up to the date of notice to the other partners. When a partner retires, what are his rights? He will get his share of profits and property. Now, when a partner retires, the firm should settle his accounts. If they continue without settling his accounts, then in that case, he will get subsequent share of profit, or his share will be treated as advance and he will get interest on advance. He can claim whatever he wants. Then, if a partner, instead of taking his share, he may decide to sell his share to any existing partner. And if he sells his share to any existing partner, he will have no further rights over the firm. And he can even carry a similar business as that of the firm if the agreement does not stop him. So, he will be liable for the acts of the firm before his retirement. He shall get his share of profits, subsequent share if the accounts are not settled. He can carry a similar business if there is no agreement to the contrary, right? Now, insolvency. The day the court declares a partner as an insolvent, he ceases to be the partner of the firm. The day the court declares him as an insolvent, he ceases to be the partner. No rights, no liabilities. Liability to he is anyway insolvent. Rights, we will use his share to pay off the debts of the firm. Death, the legal heirs do not become the partner of the firm. They can become only if the other partners agree. So, it's nothing automatic. Like in the case of a company, here it is not automatic. Now, in case of death of a partner, the liability of the deceased partner, that is the dead partner, is against his property. So, his estate shall be liable for the acts before his death. However, his legal heirs will have the rights, and these are the legal heirs' rights. That is, the legal heirs will get the same rights as retirement. The only difference is in retirement it is given to a partner, and in death it is given to the legal heirs, right? Now, expulsion, when we throw a partner out of the firm. For expulsion, good faith is very, very important. In fact, if the expulsion is not in good faith, it is null and void. And expulsion is in good faith if it is in the interest of partnership. The partner to be expelled is served with a notice, and the partner is given an opportunity of being heard. So the reason we are expelling him is because it is in the interest of partnership. We just don't catch his collar and throw him. No, we are giving him a chance to represent his case, and we give him a notice that we are going to expel you. If it is not in good faith, it is null and void. That is not valid. It must be in the interest of partnership, is given with a notice and opportunity of being heard, right? Then transfer of shares. When I sell my share, my right in partnership, or when I give my right in partnership as a security for a loan, it is transfer of shares. The transferee need not be a partner. He can also be an outsider. So that is the reason for transfer of shares, I need the consent of all or agreement. Now, when I transfer my shares to someone else, he actually gets no rights other than profit. So he will get his share of profits. He cannot check, inspect and copy the accounts of the firm. He cannot take part in the business of the firm. Nothing. Chumma, sit there on one side and just keep getting your share. On dissolution, he will get his share. But till today, you did not even let me see what my share is. So, for that, he is given a statement of affairs as on that day. Till today, this is your position and this is your liability. Is it clear? Santosh, to be very honest, I did not understand your doubt. I only understood something about death. So he get his share of profit but cannot take part in the business or check the books of accounts. On dissolution, he will get his share, and to determine his share, he will be given as a statement of affairs. Liability will be the same as the, this is correct only. The liability of the transferee will be the same as the transferor partner, right? Can we move to the next one now? Can we move to the next one? Notice, Santosh had a doubt in notice. Santosh, I'm sorry, but your doubt, you have written it, ma'am, in retirement or death, if the liability is contingent. If it is contingent about some event which happened at his time of partnership, then yes, he will be liable. Santosh, I got your doubt. You don't have to type again. I got your doubt. So, if it is contingent for some event which happened during his lifetime or during his partnership tenure, then yes, he is liable. So, Santosh had a doubt in this topic, notice to a partner. So, tell me, can I say that when one partner is given authority to buy any goods or anything on behalf of the firm, and if he buys the goods, maybe not the same quality as the firm needs, a little less quality, but he feels the firm is okay with this, will the firm be liable or not? Santosh, will the firm be liable or not? Santosh, did you understand that, or should I explain it once more, your doubt? That S was for what, Santosh? So, will the firm be liable for that? Yes, the firm will be liable. On the other hand, if he buys defective goods to cheat the firm, on the other hand, if the only intention the partner buys the defective goods is to cheat the firm, will the firm be liable or not liable? Will the firm be liable or not liable? Then in this case, the firm is not liable, they can return the goods back. So, here the notice was not a real notice, but it was with an intention to cheat. So, when the notice is with an intention to cheat, the other partners will not be liable. Now, the last unit, registration. Registration of partnership firm is optional but desirable. And why do we say desirable? Because if the firm is an unregistered firm, it cannot sue a third party. Third party can sue the firm, but it cannot sue a third party. In case of mutual indebtedness, that is if the firm and third party, they are indebted to each other, then if the case happens, then the firm can only claim a set off of rupees 100. They cannot set off the debt for more than rupees 100. And in case of a dispute, if the partners want to sue each other for their rights, the partners, if the firm is unregistered, they cannot sue each other. So in case of an unregistered firm, even the partners cannot sue each other. Now when we say partners cannot sue each other, if the partners want to dissolve the firm and for that they want to sue, then it's a different case. But if they want to sue for any other reason other than dissolution, they cannot even sue each other. So registration of a partnership firm is optional, but why it is better to get the firm dissolved? Because a third party can, registered, because we can sue a third party, we can claim a set off of more than ₹100 and the partners can also sue each other. Now, if a partnership firm wants to sue a third party, two conditions have to be fulfilled. The firm should be registered, right? The firm should be registered and the partners suing should be named as partners of the firm. The partners suing should be named as partners of the firm means the name of the partners must be registered as partners in the firm, right? The name of the partners must be registered as partners in the firm. So the partners suing, that means in the register of the registrar, their name should be entered as registered as partners of the firm. So if a partnership firm wants to sue a third party, the firm should be registered and the partners also must be registered. Now, dissolution of the partnership firm can take place without the order of the court or with the order of the court. What is without the order of the court? Here the court does not interfere with the dissolution, rather the partners mutually decide that we want to dissolve the firm. Now it can happen by an agreement, that is the partners mutually agree, let us dissolve the firm. Or it can happen on happening of certain contingencies. The firm was formed for a period of time, the time is over. The firm was formed for a purpose, the purpose is over. A partner is dead, a partner is insolvent. Except one, all are dead, except one, all are insolvent. In all of these 6 cases, because of the happening of certain contingencies, the firm will be dissolved. And by notice, a partner, in case of a partnership at will, a partner can give a written notice and dissolve the firm. I hope this is clear to everyone. What is this with the order of the court? Here the court will order that the firm should be dissolved. What are the cases where the firm can be dissolved by the order of the court? First of all, when the court will order for the dissolution, when a partner or a third party applies. Whenever a partner or a third party, anyone applies, then they can order for the dissolution of the firm, right? Now, what are the cases where the court will order for the dissolution? Permanent incapacity of an active partner. I said active, not sleeping. So, permanent incapacity of an active partner. Then, perpetual losses, consistent breach of contract by a partner, misconduct of a partner, partnership business becoming illegal, partnership becoming an illegal association. Except one, all are dead, all are insolvent. Deadlock in the management. In all of these cases, the court may dissolve the partnership firm. Right? Acha, tell me, I have 4 business, one is illegal. Should I dissolve the firm? I have 4 business, one is illegal. Should I dissolve the firm? No. I mean, I don't have to mandatorily dissolve the firm. I can just close that business and carry on with the rest 3. Padma, that sentence means that whenever a person becomes insolvent, the official receivers, they will be appointed by the court and they will sell off the property of the insolvent partner. Yes, Chetan. You have to give a little explanation, yes. In fact, the answer for the same is given in the scanner also. You can just check that, okay? In what order do we pay? We first pay the outside liability. Except one, all are dead, except one, all are insolvent. What it means is, let's say we have 10 partners, 9 are dead. And that one alone partner says, no problem, I will carry the business. Dude, one cannot carry. You should have dissolved. If you don't dissolve, the court will order to dissolve. If you don't dissolve, the court will order to dissolve. I hope it's clear. Neeraj, you got the last point. Deadlock means there are equal groups of partners and they both are not able to, both of them are disagreeing to each other. So they are not able to come to any conclusion. Yeah. Order of payment, in what order we pay? We first pay the outside liabilities, then we pay the partner's loan, then partner's capital, and finally we pay any surplus will be distributed amongst the partners. Then if the assets of the firm is not sufficient to pay the to pay the liabilities, it's a deficit. And in case of deficit, the partners will personally contribute in the profit sharing ratio. And when we say they will contribute in the profit sharing ratio, if a personally contribute, if a partner has both personal as well as partnership debts, so his partnership, his personal property will be first used to pay his personal debts and then his partnership debts. So with this, we have completed partnership. Any doubt you have, I'll give you a minute and then we will continue with the next chapter. Done? Any doubt? Can we start with the next chapter or any doubt? Okay, now I have a problem trying to search for the LLP notes. Wait, let me just search for the LLP notes. No doubt, super. This batch will score God only knows how much. I mean, the paper will burst off by your scores, I guess. है ना? So, LLP 2008. So when we say LLP, it is a limited liability partnership. It's a separate form of business. Obviously, Partnership Act does not apply to it. Obviously, Partnership Act does not apply to it. I think someone already shared it today morning or last night, if I'm not wrong. No, no, no. Why will I mock you? You guys are my student. How can I mock you? No sarcasm. Any corporate structure of business, in simple words, any corporate structure of business is a body corporate. Asking me or mocking, how can I do that to my students, man? Chalo, we'll start now. So, LLP, first of all, it's another corporate structure of business, and the Partnership Act does not apply to it. Partnership Act, in fact, does not even talk about limited liability. Only LLP Act will apply on it. Only LLP Act will apply on it. What? Only LLP Act will apply on it, right? This is also shared, I think, Sharath. Padma only shared, I guess. I saw in the morning when I was sharing the link. if I'm not wrong. So what is the minimum and maximum number of partners? First of all, individual or body corporate can become a partner. Body corporate means any corporate structure. If I put it in simple words, just remember body corporate means company including foreign company and LLP in or outside India. Acha, Purna shared. Okay, so Purna has, yeah, I never. But you, what to do? My tone, my voice, my language, my body language is like that. I cannot help. But I never mock you guys. Never. So when we say body corporate means company including a foreign company, LLP in or outside India, right? So any individual or a body corporate can be a partner of an LLP. The minimum number of partners of LLP is 2, whereas the maximum is what? Unlimited, right? Now, if at any point of time the number of members fall below 2 partners, whenever if I say members, please understand I'm talking about partners, falls below 2 and the LLP is given 6 months to increase the number. But if they carry the business for more than 6 months with the reduced number, then the only partner who has knowledge of the fact that means the numbers have reduced below 2, he shall be personally liable for all the obligations during that period. No comments, Neeraj. No comments. When can an individual not become a partner of the LLP? If he is declared to be 3 conditions: unsound mind by a competent court and the finding is in force, undischarged insolvent applied to the court. See, here it's a difference that in case of partnership, only when the court declares you insolvent, you are no longer a partner. Here, the moment you apply to the court to be declared as an insolvent, you are no longer a partner. If he is an undischarged insolvent or declared to be unsound mind and the finding is in force, right? Designated partners, every LLP must have at least 2 designated partners, right? Every LLP must have at least 2 designated partners, of which one should be a resident in India. Resident in India, please, this resident and OPC is different. Here, resident in India means who has stayed in India for at least 120 days, 182 days in the immediately preceding 1 year. In OPC, it was different. When we come to OPC, we'll do the comparison. So at least 2 should be designated partners, and please understand only individuals can be designated partners. They are just like the directors of a company. If I appoint a body corporate as a designated partner is supposed to take care of everything, filings, everything that has to be done. How will a body corporate do it? So a body corporate can never be a designated partner. So it only has to be individuals. So at least 2 individuals should be appointed as at least 2 designated partners should be there who are individuals, and at least one of them should be a resident of India. That is, who has stayed in India for 182 days in the immediately preceding 1 year, right? If all the partners are individual, any 2 individuals can be designated partners. If all the partners are body corporate, nominees of any 2 can be designated partner. If we have a combination of both, any 2 individuals or nominees, both can be individuals, both can be nominee, one can be individual and the other nominee can be partners, right? I just explained designated partners, Vibhu. I hope you've understood. Incorporation of the LLP, we have to reserve the name. 2 or more persons, at least 2 persons have to subscribe. If there are only 2 persons, they will also be designated partners. The incorporation document has to be filed. A statement shall be filed with the registrar along with the incorporation document. What is the statement? It is given by an advocate or a CA or a CS or a CMA in practice and who is engaged with the formation of the company, and by any one of the persons who has subscribed to the incorporation document. What declaration? That all the requirements of the act relating to incorporation has been fulfilled. Now, the incorporation document will also state that the name of the LLP, the proposed business of the LLP, the address of this LLP, the name and details of all the partners, the name and details of the designated partners, and any other information that may be required. Once the registrar has received these documents, within 14 days, he will register these documents and issue a certificate of incorporation. This certificate of incorporation is the conclusive evidence. No one can question the existence of LLP. Now the LLP is formed. No one can question the existence. It's the conclusive evidence that the LLP has been formed. And the certificate of incorporation will be signed by the registrar and issued under his common seal. If a person makes a statement which is false or he knows is not true, then he shall be punishable with imprisonment, which may extend up to 2 years, and fine not less than 10,000 can extend up to 2 years. I'm so sorry. Can extend up to 5 lakh. What am I saying? So is it clear? Vibhu, did you understand designated partner? I just had explained it when I was telling you about designated partner. He is the person who is in charge of the day-to-day business of the LLP. Ouch. Generally, they have not asked, but at least this false information, remember this, huh? At least this false information, this one too you remember, okay? Now, every LLP will have a registered office. All the documents will be sent at the registered office. They will be sent under a certificate of posting or by registered post or any other manner. Can we change the office? Yes. Any change shall take effect only when it is filed with the registrar. The name of the LLP shall end with LLP. Should end with the words LLP. And it should not be undesirable or identical to the name of any firm, body corporate, LLP, trademark or a registered trademark or a trademark which is on the verge on in the process of registration. The name shall be available for a period of 3 months. If at any point of time you are registered with a name which is undesirable or identical, the central government will order to change the name, and within 3 months the name has to be changed. Right? Now, relationship of partners. The mutual rights and liabilities of the partners shall be governed by an agreement between them. In case there is no agreement, then as per the Act. The Act has a model agreement. That model agreement will be used by them, right? Is as given in the first schedule. Then, any change in the LLP agreement shall be filed with the registrar. If the partners have made any agreement in writing, before the incorporation, it will be binding on the LLP after incorporation also if it is ratified by all the partners. So any agreement entered before the incorporation of LLP which creates an obligation on the LLP, so that will be binding on the LLP if after the incorporation all the partners ratify it. Yes, Neeraj, that is why I just kept quiet about it. So now this one, termination of partnership interest. Because it's a little common and it's a very small topic, so I am not going into too much of detail, and it's very much common with partnership also, so I'm not going into too much of detail. I'm going a little fast with it. So termination, cessation of partnership interest, that is termination, it can happen by choice or by default. By choice is by agreement, or if there is no agreement, by giving a 30 days notice, or it can be by default, that is death, dissolution of LLP, declared to be of an unsound mind, or applied to the court to declare as an insolvent. So I repeat again, termination of partnership interest can happen either by choice or by default. By choice is that partners mutually decide to dissolve, a partner himself decides to leave the firm. So when it is by choice, it can happen by an agreement. If they have an agreement that this partner will leave the firm on this and this day, that is by agreement. On the other hand, if there is no agreement, he can give a 30 days notice. Now in partnership, there was no time for notice. But here we have a 30 days notice clause. In partnership, there was no time for notice, but here we have a 30 days notice clause. Then by default, it can happen in the case of death. If the partnership itself LLP itself is dissolved, obviously I am no longer a partner. Or after appointed as a partner, the partner is declared unsound, or he is applied to the court to be declared as an insolvent. In all of these cases, he will cease to be the partner of the LLP. Tell me, when a person ceases to be the partner of the LLP, a notice of the same has to be given or not? When a partner ceases to be the partner of an LLP, a notice of the same has to be given or not? Notice to the registrar that he is no longer a partner. Yes? So if no notice is given, can we say for the third party he is still the partner of the firm? So if no such notice is given, can we say for the third party he is still the partner of the firm? So a person shall, after cessation of partnership, still be deemed to be a partner if the person with whom he is dealing has no notice of termination or notice was not given to the. If notice is given to the registrar, you know, you don't know, you are no longer, the partner is no longer a partner. But if notice was not given, then to the third party, he will be deemed to be a partner of the firm. Right? He will be deemed to be a partner of the firm. Now, he will be liable for the acts done when he was a partner. When he leaves, he will get his capital contribution and accumulated profits after deducting accumulated losses. And then he will also have a right, after that, sorry, he will have no right to take part in the business or interfere in the business. So the partner, or in his case, the legal heirs, will have a right to get his capital contribution and accumulated profits after deducting accumulated losses. The partner or the person shall have no further right to interfere in the business of the LLP. I hope it's clear to everyone. In case of death of a partner, obviously it will be given to the legal heirs, right? Whereas in case of a partner, it will be given to the partner. Now here there are two clauses. First is partner to LLP, second is LLP to registrar. Partner to LLP 15 days, LLP to registrar 30 days. Please remember here there are two clauses, partner to LLP, LLP to registrar. When it is partner to LLP, it is 15 days, and when it is LLP to registrar, it is 30 days. Okay. If the name or address of a partner has changed, he should inform the LLP within 15 days. The LLP will in turn inform the registrar about the change within 30 days so that the registrar can make the changes in his register. On the other hand, if a partner has become if a person has become a partner of an LLP or he has left the LLP must inform the registrar within 30 days about this change to the registrar so that he can make the changes in his register. So, any change in the name or address of the partner should inform within 15 days to the LLP. Any change in the person, that is, he becomes or ceases to be the partner, or in the name or address of the partner within 30 days, inform the registrar. Can it happen that I may think that the LLP may not inform? Then I can myself inform the registrar. If the partner has reasonable cause to believe that the LLP may not inform, he may himself inform the registrar. But registrar cannot just rely on you. Maybe you are giving a false information just to avoid something. So he will confirm with the LLP, and if no confirmation or no objection is given within 15 days, he will register the change. Is it clear to everyone? Is it clear to everyone? We will now take a break and I'll see you in 30 minutes. Go and have your breakfast and then we'll continue. Okay? Yes? So eat well and be back in 30 minutes. Okay? I've already shared the link of the other one also in the group. So just check it and I'll see you in 30 minutes. Bye-bye, bye-bye, bye-bye. This PDF is there in the group, I guess. Neeraj, it's already there in the group. Okay? Then message some of the students, they will give you, I guess. Bye-bye. We'll anyway talk after the break. Chalo.